It's been another transitional year for Croda, following two exceptionally strong years in 2021 and 22. The market environment remained subdued throughout this year, but with more stable inventories and demand in most businesses and regions. Group sales were up 2% at constant currency, excluding covered lipid sales in the prior year. And this was weaker than we'd hoped, but proactive actions to reduce cost and drive efficiency delivered profits in line with expectations at £273 million in constant currency. This was a great team effort by everyone at Croda, and I'd like to thank all of our people for playing their part. Sales of new and protected products grew by 6% as our innovation pipelines expand, and whilst the adjusted operating margin was down, it improved half on half, supported by price discipline and proactive cost control. So overall, our performance is still a far cry from where we want to be, and we're continuing to respond to that by taking further steps to strengthen the business, making Croda more focused and more efficient. Consumer Care sales were up 7% at constant currency to £920 million. Sales to local and regional customers increased 11% as they continued to grow well, and we're well positioned to benefit from the increased continued success with our expanded local footprint and strong innovation and R&D capabilities. F&F was the standout performer, growing by 18% at constant currency, ahead of the underlying market. And Beauty Actives delivered sales growth of 6%, led by Asia, while Beauty Care was flat, with growth in all regions at constant currency, apart from EMEA. Demand for innovative ingredients was strong, with NPP sales growing by 11% at constant currency and increasing to 43% of total sales for Consumer Care. Overall sales were down by 16%, or by 6% when adjusting for currency and contribution from sales of COVID-19 lipids in the prior year. In pharma, consumer health and veterinary markets remained challenging, particularly in Europe, whereas biopharma markets saw some improvement reflected in the performance of our excipients and lipids. Sales in crop protection were down 16% at constant currency, but we've seen increasingly stable crop commodity prices that have supported improved demand in the second half of the year. NPP as a proportion of total sales increased to 31%, with our strategic focus areas in pharma a higher proportion of sales. Whilst we're confident about the growth potential of our portfolio, we need to go further with our actions to drive sales growth, increase our margins, and improve returns. So we're focused on 5 areas. First, it is clear that our markets are continuing to fragment, with local and regional customers continuing to grow. We will take further advantage of that by leveraging our direct selling model, global footprint of innovation centres, and our ability to cater for customers of all shapes and sizes. Second, with renewed customer appetite for innovation, we are reimagining what innovation looks like, localizing our approach to meet the needs of consumers in each region. Third, we want to get even more from the recent investments we've made. That includes converting our pharma pipeline and maximizing the potential of ceramides and phospholipids added to our portfolio by acquisition in 2023. Next, we're increasing our focus on the less differentiated ingredients to help drive sales volumes and improve utilization rates at our larger manufacturing sites. And finally, with our new organizational structure in place from the start of 2024, we are reducing costs by simplifying and modernizing the business. So through these actions, and as a prudent approach to managing our invested capital, we are committed to improving returns. We expect both Consumer Care and Life Sciences to grow sales in 2025 with continued volume recovery. Operational efficiencies should significantly offset inflation and the incremental costs associated with new investments being commissioned. So overall, we expect group adjusted profit before tax to be between £265 million and £295 million at constant currency. And whilst we've seen progress in 2024, we're a long way off from where we want to be, There is a lot to do in the year ahead, and we're laser focused on restoring profitable growth, improving returns, and leveraging this